Hi there, Stephen Hurd with eXp Realty here in Orange County, California. This video, we're going to be covering everything you need to know about getting pre-approved for a home loan. I'm assuming that you've already gotten in touch with a mortgage loan officer or that you have a contact that you plan to get pre-approved from. If not, step number one is find a good mortgage loan officer. Step number two is determine how you're paid. Most people are paid W-2 income. That means that they get a check from their employer every week or every other week, and they have that consistent, steady W-2 income. Other people, like myself, are 1099 independent contractors. That means we're paid on commission or when we provide a service. So the loan type is going to be different on the basis of how you are paid. Because most people are W-2, I'm going to jump straight into that, and then we'll talk about 1099 as well. So W-2 income, you're generally going to have to provide 2 of your last pay stubs for your last pay periods. So you're going to want to contact your company and get your 2 pay stubs for your last 2 pay periods. You are also likely going to have to provide your last 2 years of tax returns. And then you're also likely going to have to provide 2 months worth of bank statements for all of your accounts. So those are the main things that are going to be required of you if you're a W-2 employee. It's fairly simple: bank statements, pay stubs, tax returns. You'll also need a copy of your driver's license, which is very simple to provide. And then you will also, they'll need to run a credit check on you. Now, a lot of people think that, what happens if they run my credit? Isn't it going to make my credit score go down? Well, yes, if you get pre-approved by like 4 or 5 different lenders, your credit score is going to go down. But if you get pre-approved by 1 or 2 people, it's not going to be a big issue. So they're going to have to run your credit and collect all of those items from you. You will also have to fill out a preliminary loan application. So that's just going to ask for things like your social security, places you've lived, your employment history, just a brief 1 or 2 page application that will help them get enough information to see if you qualify for a loan. So that is if you are W-2 income. But what about if you're 1099? If you're 1099 in general, this is not always the case, but for most people, you need 2 years of your tax returns in order to qualify for a loan. So that means if I just started my job, let's say I'm a real estate agent, and I just started my job 1 year ago, it's going to be really hard for me to qualify for a loan now unless I have a really high down payment. More than likely, I'm going to have to be on my job for 2 years and have 2 completely finished tax returns. And what happens is they basically average my income. They'll take the 2 years income and then they'll average it out. So if I made, $50,000 1 year and $100,000 1 year, basically my average income is going to be $75,000 a year, and that's what they're going to use to qualify me. I'm still going to need the other things: bank statements for the past 2 pay periods, pay stubs, driver's license, and application so that they can run my credit. But that is basically it. So the number one thing that you can do in order to get pre-qualified is you can gather all of these documents in advance. I like to save them in one file so that it's easy if I want to speak with one lender, and then I can simply send everything to another lender so I can get qualified very easily. So that is how that process works. It generally takes them 24 to 48 business hours to give you a response and to get you pre-qualified. Once you're pre-qualified, you want to sit down with your lender and go over your payment options. That's the one mistake that everybody makes, is they get pre-qualified and they think, oh great, I'm qualified up to $900,000, let's go out and buy a home. And then after all the costs add up, they look at that payment at $900,000 and it's just way too much for them, way more they can afford. So first sit down, go over your payment options, and make sure you're making a responsible decision before you buy a home. You don't need 20% down. You can buy a home if you're a veteran with 0 down. First-time home buyers, 3.5% down. Conventional loans as low as 5% down. So there's lots of different options to help you purchase. But with that being said, that is the process. I hope you found this valuable. If you have any questions about real estate, reach out to me anytime. If you're here in the Orange County area, 949-735-6392. Thanks for watching and have a good day.